some cases, carriers, they have been increasing even their revenue share, and it can go up to 70% in some cases. So they take 70% of the end user price, and we get only 30.
The fees which operators charge are very high. And this is where the credit card fees, the bank fees are much, much lower.
There's no way Visa and MasterCard can touch their merchants' money. But in DCB, sometimes it happens that we do not get paid.
Do not wait too long. This is the time.
Hello, welcome at today's event about the roadmap to switching from direct carrier billing to credit card. My name is David, I'm CEO at eFlow, and I have the honor to introduce two specialists in this industry. Thank you very much for joining us today. Alexis, CEO at Sam Media, and Sunil, CEO at Celeris. We've been working together for many years, and it's really an honor to share some insights and knowledge with the market today. Alexis, maybe a few words about yourself before we move to Sunil.
My name is Alexis Bartels. I'm a founder and CEO of Sam Media. Sam Media is a merchant, and we develop and license premium content, and we sell that content to consumers worldwide. Two of our flagship products worth mentioning. One is XR Academy, is casual education service, where you can navigate the world with 3D models of the solar system or the human body, explore and get more info, and there's also interaction to test your knowledge. So that's one of our flagship services, and the other is a new one, SingSpace, developed with Canadian company Stingray. It's a virtual karaoke where an avatar of yourself can perform songs in a virtual world with friends that are in different locations. So there's also this social element. Those products we are marketing directly to consumers and billing via carrier billing, and now increasingly also with credit cards.
Thank you, Alexis. Over to you, Sunil.
Okay, thank you, David, for having me. It's a pleasure speaking with you and Alexis. My name is Sunil Cham. I'm the founder CEO of Celeris, based in Amsterdam, Netherlands. We offer our award-winning payment orchestration solution to online merchants like Sam Media, and where they connect with us. We open all new markets for them, basically the whole world through one connection. We are not in the money pool. We don't touch the money. However, we help merchants connect with multiple acquirers, banks, different payment methods across the globe. We offer a lot of value-add services where they can benefit from, fraud protection, stuff like that. Yes.
Thank you. Alexis, you mentioned you have offered your products using direct carrier billing. Since how long?
2006. So we're going towards 20 years. Not yet. We will celebrate that in a proper fashion. But of course, back then it was also mainly premium SMS, and then increasingly carrier billing came into place. In the end, not such a big difference. So we've been doing it for a while. What changed a lot, of course, with technology evolving is the products, initially text-based. We all know the time of the wallpapers and ringtones, and now they became a lot more advanced with VR, AR-based products. But also in terms of marketing, back then there was offline marketing or TV commercials, and now it's all online, where we attract users to come to our pages and opt into one of our services.
Am I right that not only you, but also many of your competitors solely used direct carrier billing market to have customers pay them?
Yeah, correct. The reason is that it is widely adopted. Everyone has a mobile phone. That means everyone has access to this billing method. And that made it easier and the best solution, because also often marketing, if you put your ad in a newspaper, or now even if you advertise through Google, you don't know if the user that sees the banner has access to a different payment method than carrier billing, but everyone has access to carrier billing. that at least how it used to be. That is changing in some markets, and there are some other conditions that make carrier billing sometimes less attractive. But that was the main selling point. It's a seamless, widely adopted payment method for small amounts that are available everywhere across the world to every consumer, and that makes it so attractive.
I see. And then you mainly partner with telecom operators, I suppose.
Yeah, so there's two models. One is with payment providers that in turn connect directly with the various operators in a specific market. And then we connect to one payment provider who has those connections in place. But sometimes and increasingly, we also connect directly to the mobile operators. Some they like that, and we also like it because we're able to have that direct relationship to show what we are doing, how we are doing things, discuss customer care, sharing information, etc., doing joint marketing. Some carriers, they prefer to let the technical flow and billing flow run to a master gateway. For them, it's a way to outsource some of the operations. But yeah, that's how it works in terms of the billing. I mean, marketing wise, we market directly to the consumer.
Yeah. When did you consider to start looking into credit cards?
Yeah, there's various reasons. Some is opportunistic. We saw some competitors doing that, and yeah, of course, it's always a trigger to start looking into it. Also shows that maybe a little bit late already. At the same time, we also faced, and that's also probably what triggered those competitors. We also faced some challenges in carrier billing. Some markets, like the biggest in the world, the United States, carrier billing was not really available anymore. We were still live at some point, but not possible to make it profitable or substantial volumes. As an example, other markets, carriers became a bit more reluctant or regulations changed. So there were some hurdles which removed some of the advantages of carrier billing. So it became quite complicated to opt in. So the whole advantage of high conversion, relatively smooth flow, payment experience for the end user is not always there anymore. And what you also see is that carriers, they take a very significant percentage of the revenue. And that's sometimes difficult because we need to invest a lot in products we spend a lot of money on product development, also on licensing content. Like for SyncSpace, we need to pay the music rights. So yeah, and on top of that, we need to do the marketing of the services and all that from our cut of the revenue. And in some cases, carriers, they have been increasing even their revenue share, and it can go up to 70% in some cases. So they take 70% of the end user price, and we get only 30. And from that 30, we need to do product development, marketing, pay our overheads. So the business case also became a little bit less attractive in some markets and almost sometimes difficult. And carriers, they want us to innovate. But yeah, then we also need to have the revenue share to innovate.
Yeah. So Neil, you speak with a lot of merchants and prospects. Do you see many others considering or having already transited as well?
No, absolutely. This is the trend we see from last 18 months. As Alexis mentioned, one of the reasons why Sam Media was looking for a credit card and processing because the competition was offering that. And this is where those competition, without taking those names, they are on our platform and we help them grow significantly. So this is what is the trend, what we see. And as Alexis mentioned, because the use experience with DCB is so easy, with the easy click, they can convert. So we kind of replicated the same user experience when they are on our platform or using credit card or other bank payments. So then there's no friction for those customers, but they get the same or better user experience. And yes, that's the trend what we see. And also Alexis mentioned the fees which operators charge are very high. And this is where the credit card fees, the bank fees are much, much lower. And that's where also they're taken advantage of. And the lifetime customer value is much higher because the ATV is much higher as compared to DCB here. So there are many other factors as well, including these. That's why we see a lot of these merchants in DCB industry moving into credit card and bank payments.
Yeah. We were speaking of fees, whereas in credit card world, most merchants would pay a gateway like salaries. and on top an acquirer, a card processor, which has fees because of fees imposed by Visa and MasterCard, imposed by card issuers. Obviously, an acquirer wants to make money themselves. Alexis, back to carrier billing. Is it the operator only charging you, or do you have other fees to take into account as well?
No, it's mainly the operator, but if it goes via a payment gateway, then also the payment gateway takes a revenue share.
Sure.
Usually it's a revenue share, sometimes it's a transaction fee, but in the end comes down to the same thing. So yeah, those two are the
And you mentioned fees as a big difference. What would other large differences be between direct carrier billing and credit cards?
Well, in favor of carrier billing is still the penetration, and depending on your marketing, if you do a broad approach marketing, where in the end you learn and you start to target certain segments, but then often it begins with broad targeting, and if then only some of the users can actually pay for your service, then yeah, that's not so effective in terms of marketing. So that's still an advantage of carrier billing, although in some markets, and that's what people sometimes forget, many consumers, they're blacklisted for carrier billing because they're on a corporate contract. So the company doesn't want them to use entertainment services or other premium services. So we cannot bill them, even they would want to. We can't unless they have a second phone. And yeah, I mean, there's less and less people that have that. So these can be very substantial. And in some markets, it can be half of the market that for us also becomes inaccessible. So that's a big difference. Well, a difference that is less and less the case. It really depends on the market, the penetration, and at the same time you see penetration of alternative payment methods like credit card, but now of course even more, a lot more with Google Pay and Apple Pay. Penetration increases, which makes the equation in terms of marketing better in favor of credit card or other alternative payment methods. And then what is very, very big difference, and sometimes that has more impact than in other cases, is the regulations. So there's no way Visa and MasterCard can touch their merchants' money. But in DCB, sometimes it happens that we do not get paid because of issues between joint venture partners that sit in between. And it's not regulated by the financial authorities. It's regulated by either telecom operators' own regulations or telecom regulations, but it's not about the money. So it's not like the money is parked on an escrow type of account. No, it's in the payment provider's bank account, and some of them, for various reasons, sometimes they invest in other projects, or they're just going through a difficult time, and the result is that our cash flow is being, well, at best delayed, or certain amounts, and those have been very substantial, also in Europe, by the way. So it's not a matter of exotic markets. Large amounts have not been paid, so that's a big hit because we already spent all the money in marketing of the service, in licensing content, and then months later, it turns out that the money is taken by someone or used by someone, and that can never happen. I mean, no way Visa can touch our money. So yeah, that is quite different.
And if understood from you before during one of our conversations, it's not only the question whether to get paid, but also the massive delay in being paid, right?
Yeah.
Can take years.
Yeah, correct. And if we talk about this, then people are always so surprised, but we got used to it. It's our daily life. But indeed, again, depending on the market, there's markets where carriers pay very quickly and very clockwise every month on the same date. But there's markets where we need to wait up to 6 to 10 months sometimes for the settlement report, and we can only invoice. And so we get paid sometimes up to a year after the transaction month. All this while we have been financing this, and putting money in marketing, paying our overheads. And imagine you're growing, that eats even more of the cash. So that's quite a challenge. I mean, we learn to live with it, but of course it's not ideal. Also, it's quite a significant risk. We had cases where in that 12 months, the currency got depreciated against the dollar, and we lost 20% of all the revenue because they used the current exchange rate when paying us, and 20% was gone. So these things also. And with credit card, yeah, well, you guys know better than I do, but you can get paid weekly if it's certain volumes, and yeah, that also makes business life quite a bit easier, and also lowers the barrier to invest in growth.
It sounds Wild West, Alexis. Sunil,
Good
a
thing is the
merchant.
industry is maturing. That is the good thing, but still, indeed, some of the elements are quite challenging. Yeah.
Yeah, I can imagine. Sunil, a merchant used to direct carrier billing and moving to credit card would have to technically reach the different card processors he might use. Can you elaborate a bit how that would work from a technical perspective, integration wise? How do you serve merchants from that perspective?
Absolutely. Actually, we offer quite a few options to integrate with, depending on the tech suite they are using and how much volume they have. And we have actually wrappers, SDK, plugins, APIs, depending on their choice. They can pick one. It's just very easy to integrate. If I were to take the example of Sam Media, it was like done very fast because they already have a tech team who's experienced enough, because they have integrated, the telecom providers and the other gateways in the DCB world. So basically, the concept is the same. It's just like having a different integration for credit cards. So, and our documentation is like very easy to read, to follow, step by step. So, and our support provide like one-on-one support as well if needed. So makes it super easy to integrate. So the integration, and of course there's a knowledge which comes with it, because they're moving to credit card for the first time, to understand how credit cards work, auth versus captcha, auth versus void. How would that work? Like a zero amount auth versus the other amount, instant capture to delayed capture. This lingo relates to credit card world, not to DCB world. So this is like a learning curve, which our team help the merchants understand better, and then they can make an informed decision based on this, how they want to play in the market, how they want to test their products, maybe on a trial basis, and after the trial has been done, 3 days, 5 days of trial, depending on a customer to customer, and how they want to have a subscription billing start after that. And this is where we also educate them and also offer the flexibility around it, how easy they can do, which is not available in the DCB world, as Alexis pointed out. We make it easier here because the credit card options and the other bank options allow that. So we make it kind of easier, at the same time mitigating fraud as well here. And touched upon, as Alex mentioned, Apple Pay, Google Pay penetration is growing. That also helps, is coming from a trusted source, so which can also help mitigate fraud. As the market is growing, especially in the Western world. If I were to take, for an example, US as an example, I see I read it, 54 million people in the US paid through Apple Pay, last year, 54 million. And 30 million in the US paid via Google Pay. And it's growing significantly. It's going to grow 60% up to 60% here in 2025 this year. That's what they're predicting. So the adaptation of Apple Pay, Google Pay is growing significantly. So this also helps the DCB merchants, with our solution, what we also provide with the hosted fields, similar user experience, in some cases even better user experience from DCB, and at the same time mitigating fraud. That helps merchants, to grow. The risk appetite grows because now they can manage their risk. As Alex mentioned, they can get their payment very soon. They don't have to wait months or never. Here, based on a weekly, bi-weekly basis, they can get their money back, so their cash is not stuck. So they can manage their cash flow. If you can manage better, you can enter new markets. You can take bigger risk. And also, as Alex has mentioned, with the Google, Google AdWords, and once you have combined Google AdWords with Google Pay, it makes it even easier. It helps the conversion better as well, because Google recognizes that as well. So all this, of course, is educational stuff, which along the line we help merchants understand, and then it's a partnership basically. It's not like one time they have done the integration and they go away. So every step of the way, we help our customers and merchants like Sam Media go through those challenges and how easy they can make it in their offering to their customer, because our interests are aligned, So that's where our motto goes. We grow when our customers grow. So what can we do for our customers, make it easier so they can grow and we grow in the process?
Yeah. From a credit card payment perspective, I would say the two biggest challenges for merchants like Sam Media are the question whether a customer is billable, a lot of declines because of insufficient funds. And secondly, for sure, what we call friendly fraud, customers claiming it wasn't them, which is very hard to find. Is that comparable, Alexis, with carrier billing? Are those challenges you were already used to?
Yeah, similarities, but very different in how it surfaces and what to do with it. And so yeah, friendly fraud, as in consumers claiming they didn't do it, they didn't know what they subscribed to, even though everything was compliant. That I think is human. So you will find it everywhere where you buy something. I think all of us also experience sometimes you regret an online purchase, even though you did it and you went through all the steps. So I think that's human. So yeah, and of course it's important to entertain these things, and if people are unhappy with what they opted in for, or then it's important to have customer care that can help them, or self-help tools, which are even more and more important, where users can find the service and stop it. Most important, because most people that just want to stop. And sometimes they want to claim a refund or so. So that will always be the case, and you just need to manage that well. And it's part of the life cycle of a consumer, of a customer. So that's really, really important. Also, you can learn from it, because we also loop it back to our marketing understanding, and the same for credit card payments, and the same for carrier billing payments, to understand what kind of marketing triggers more, what kind of questions from customers, what kind of complaints, which even placements in Google generate more complaints than others, so we can stop those placements, or we can look at the promotional material. So that's one thing. In terms of the billing success, yeah, that is critical for both payment methods, but very, very different. And that's also one of the biggest challenges for us to learn with credit card payment, is how to optimize the billing success. So for carrier billing, there's a few parameters. Sometimes not even in our control. Sometimes there is simple ones like time of the day, or throughput, or if it's monthly billing, when to bill, things like that. But that's about it. There's one mobile operator. It's not like with credit card. There's so many different parameters, different acquiring banks, different bins, like the showing different type of cards, and a lot more, which you guys can tell a lot more about. But that has been one of the big learnings for us, and still we're in the process there to better understand that. So in terms of optimization there, with carrier billing, that's overseeable, and the back end. And on the front side, the marketing, with carrier billing, there's maybe even more to optimize, and to A/B test, and to learn all similar. But on the back end, credit cards are a lot more complicated to optimize, and it's not because it was new to us, but I think there is just more parameters that you need to understand and try to test and optimize, and that is key for success. And I think there you also need partners like Solaris, like eFlow, to help, and that's been our main learning and challenge.
Yeah, I heard one of your competitors saying a few months ago, going through the same transition. This card world is so fragmented. There is so many actors we need to take into account, and that's right.
So David, if I would like to add to this, the friendly fraud you touched upon, like, okay, when you're working, of course, there are many features and solutions coming out from the card scheme, Visa and Master, to cater to that. And just to give you a few examples, like, of course, if it's coming from Apple Pay, it's a lot less, because it's coming from a trusted source. So, it's a lot hard. It's very hard to say that it wasn't me, And then with the introduction of network tokens, what we offer as well. So then Visa, Master, they can easily detect and see where the transaction came from, So these friendly frauds are, they're going down because they cannot defend themselves anymore, because it is, they did make the transaction and they cannot deny it. So it's already there. And of course, we have in Europe, as you know, 3DS is mandatory, and we have built our own, like a token vault, and we have our own multiple MPI providers where we do the 3DS check. So which also takes away the fact, reduces the friendly fraud. And in the addition, with network tokens, and with the combination of all, we have seen the friendly fraud going down significantly for some of our merchants. And the conversion has gone up between 8 to 15%, when we have offered our Apple Pay, Google Pay, in the whole combination of all of these things. Of course, these are like fragmented things, as Alexis mentioned, but this is where payment orchestrators like ourselves, they come into play, where merchants are not bothered with this fragmentation part. We take care of everything, and they have just one company to deal with. And in the background, we take care of all the challenges faced by them. And of course, with the offering from Ethoca and Verify and some other solutions, you can still manage that, and you can easily, of course, fraud is not going to go away, but you can mitigate fraud.
Additionally, Alexis mentioned the challenge of charging customers and rebilling, retrying, and so on. How do you approach that, Sunil?
Yeah, actually, it's a very good question. And actually, it sounds very easy. Rebilling subscription and all, it's not that easy. My team worked for many months, over a year, to come up with a solution which provides the flexibility to the merchants, how they can rebuild the transactions, at what time of the day, what day of the week, which date of the month they can set up those billings. If they can give them the flexibility to increase the amount or to lower the amount, and how the trial should run, when the trial should end, and how easy it is to upsell, and how to suspend or cancel the subscription. All of those features we have built to make it much more easy for the merchants, so they don't have to work with all of these challenges. Of course, in the absence of these tools and these features, it becomes a nightmare for merchants to manage this. And then in result, you see a lot of chargebacks coming in, because it was not managed properly. And this is where we come in, and also with the help of the merchant advice codes, we use it. We help the merchants when to attempt for the rebilling, when to, if there's insufficient balance, and when they should go for the next try, and not. So this helps, make them make informed decisions, and all this can be automated in our system.
Cool. Alexis, it's a difficult question, but where does this end? I mean, direct carrier billing will not disappear, right? But what would be the most important payment method? How big can you reach in terms of credit cards? What new opportunities will it bring you? Or is that simply a too early question to ask to you?
No, it's interesting. I mean, of course, for many years, people always have been predicting the end of carrier billing, and I've never been so pessimistic, and it's stronger than ever. So, but I think that is a defining period now, as in some carriers, you see they see the opportunity. Also for them, of course, most carriers also, the voice revenues are going down. They're faced with high investment in data infrastructure, which they need to recoup with some service. So payments is one opportunity for carriers. Some embrace it, but some, they just see it as wholesale, and they even increase their revenue share. And that is a conversation we're trying to have with them. Be aware what's happening, because look at Google Pay, look at Apple Pay, look at credit cards, look at mobile wallets. Some parts of the world, Africa obviously, but also in Asia, Latin America, that's also increasing in terms of penetration, increasingly used for digital goods as well, not only physical goods, as how it started in Africa. So yeah, the world is changing, and the opportunity is still there for carriers because they're in a very strong position in many ways. Also, the data they sit on that can be very valuable. They can also monetize together with merchants. But yeah, if they continue to take so much of the revenue and make the flows complicated, sometimes with good intentions, as in to mitigate fraud, but yeah, it's not always the best way. So there is challenges there, and if they don't embrace it and they don't make sure that carrier billing remains competitive, which is really my message to them. Think about it, try to be competitive, but at the same time, yeah, the penetration of alternative payment methods will continue to grow because of the opportunity. So there's companies that jump on that, but also the advantages for the consumer in terms of trusted payment method. The flows become easier. So also for merchants. I mean, in the end of the day, for us, we focus on products. We develop catchy products and we sell them to consumers. And then payment, of course, we need to find the best payment method. Sometimes consumers like choice, but for us, it's like what is most successful in terms of the revenue per user, the reach, also payment cycles, indeed how safe is our money. So all these factors and that balance is shifting towards alternative payment methods like credit cards, Google Pay, Apple Pay. So yeah, I see the field becoming more complicated, more fragmented. At the same time, stronger presence of alternative payment methods. So I think, yeah, the both will, if you group it as two groups, will continue to thrive. But carrier billing has to step up its game. And even if they do, then credit card, Apple Pay, Google Pay will take a bigger part of the pie. And yeah, that is inevitable. So also for merchants, it's important to offer this to our customers, and not only from a business perspective, but also consumers. They expect it that they can pay that way. So yeah, we embracing it, and yeah, we are learning, and we want to learn faster.
So Neil, you've seen merchants starting this transition before Alexis and his company did. Can you share some successes?
Yes, absolutely. The big successes, Alex came to us because of that. Yeah,
I would rather have seen the other way around, Sunil, but thank
yeah,
you.
of course, already, of course, and because of Alexis, we're going to replicate the same success for Alexis, for Sam Media, and for the other customers to follow the same. Because last year before, a lot of these customers in the same DCB space who were just transitioning to credit card, we helped them with the strategy. We sat down because it's all very new to them, how to do it. So of course, the DCB, they have mastered it. They understand everything, as Alexis explained it earlier. But credit card and bank payments, totally new field, how to go about it. Because the whole strategy changes. They need to make a lot of changes internally, how the products are developed and how they're going to be marketed that way, because it's geared towards a different audience. And credit card, of course, the ATV is much higher, the audience is different. So they had to change all the different strategy to cater to this audience. And this is where we sat down, we helped them, we explained it to them, the whole challenges with the credit card, how to shift with it on credit card, what we can take care of it, how we can help you streamline the whole process. And basically, we took care of all of these challenges from the credit card stuff, and we helped them with the strategy. And it's a joint effort. And we see the big results, and they grew significantly. And for one of the customers, eFlow is part of it in that success journey. So eFlow is helping them with the opening up new markets, with new mids, with new banks, and Solaris is helping them with all the tech challenges that they have. So of course, it's a partnership, and we have seen huge success with other customers. And basically, whatever, and a few of them, they have told us whatever they pay us as a gateway fee is basically is free, because the kind of conversion we help them grow, it adds to their bottom line, and the new markets which we have helped them. And for some, because of our reconciliation process, all the other stuff, actually is less resources are needed internally to do all that work. With different acquirers, we help them with the reconciliation, real-time available, all this information. So the same resource who was working on reconciling these transactions and managing these transactions and all, now focus on doing something else. So we not only added value to these merchants with the opening new markets, growing their revenues, optimizing the success rate, but also help them internally where the resources are being used on different things, not on payments stuff.
So you're going to raise your fees short term?
Actually, I would like to, as we see from the other our partners, they who we work with, they all have raised, but we work with 100% transparency and partnership. We will not raise our fees while running the contract. Once we sign a contract, we stick to that. We commit to that part. But of course, our merchants, we want them to grow. The more the transactions they do, the more we make as well. So as I mentioned earlier, our interests are aligned. We grow when they grow, basically. So our objective is helping them enter new markets, optimize payments, mitigate fraud, and so a return on their marketing spend is much higher. So this is where we come in as a business partner, helping our merchants grow.
Yeah. Alexis, you mentioned before looking for some partners to help with this transition, which was one of the lessons you learned in terms of what you need. Any other lessons you learned or obstacles you're still facing?
No, it's still the billing side. So that's partly technical. We're collecting the data points, make sure we have all the relevant data points, do our own analysis, and then optimize. Partly that's done by like Solaris, like the orchestration platform with the tools they develop. But some of the things we need to do, we also link it to our marketing, and there's also information there that helps us to optimize. But the billing success, that's still, we see for the same user, there's so much difference depending on how that is managed at the back end. Many parameters we want to A/B test against each other to find out what is the best way. Some of that comes from people like you guys, from Solaris and eFlow, because you have all that experience and knowledge. Some of it we have to just learn and find out, because also, it's for every merchant slightly different, every market, every type of product marketing. But also technical. Initially, we thought that we can run it on the same platform, on the carrier billing platform that we have, the in-house built carrier billing platform. Then no need to learn that that's not gonna fly, at least not going forward with everything we would need. So then we back to the drawing board. We developed a new platform. If we would do that now, it would be another new platform because so much we learned in the meantime. So I think there we lost time by not involving or not being exposed to enough knowledge earlier in the process. So that is still some, and then this complicated landscape of the different acquiring banks and the relationships and what to do to manage your account or how to increase your caps or that world is conceptually not different, but all the players are different. I've been to trade shows where I didn't know anyone for the first time, where I was in carrier billing as one of the old hands. I know most people, but so it's a different world. This is very exciting, but also means we need to put all the effort in order to master it and to learn it, and we are still in that process. So there's still a lot to learn, especially those fields.
I know, Alexis, what the challenges Alexis is mentioning with this, especially comes to acquiring bank. This is where we come in and helping them, because not all acquiring bank systems, they work the same. Like some acquirers, they offer Apple Pay, but they do not offer recurring on Apple Pay. So this is where, how do you manage that? And some with the TC40 or chargeback reporting is not done on time. There's still many gaps there in the acquiring side. This is where Solaris comes in and try to bridge those gaps and making it easier for Sam Media, basically. So of course, this is where the orchestrators come in handy. to bridge all these gaps. And Alexis mentioned, because this is a very, very challenging environment if you have to work with all the acquirers individually and not understanding payments and all the challenges that come with it. So this is where we try to help merchants like Sam Media, so they're not worried about these payment challenges. They focus on the core business, and we take care of these challenges.
I think I know your answer to the next question, Sunil, but if you are a merchant and you need to select either the acquirer first or your gateway first, who should I focus on?
The thing is, I would say gateway first. The reason for that is because acquirer is just one single entity. Gateway is acquirer agnostic, and gateway can open many acquiring relationships or partnerships as well. Whereas when I go to an acquirer, I only have one relationship, one partnership. So as a gateway, I can open to many acquirers, which actually help with the routing, cascading, like managing risk, all those kind of options become available when you work with multi-acquire setup, and that can only help with the orchestration providers bringing it to that. And what we have also seen for merchants, when you have orchestrator in between, basically we bring them back into the driving seat, so they manage their data and all. And for one of our merchants, without taking names, one of the acquirers had raised the fees on them. So this is where, without understanding, having a discussion with them, they raised the fees and they were charging a lot more. They told us, and then we helped open new channels for them. So what they did, so they turn off the flow to this acquirer and move to all the other flows to the other acquirers. And guess what? Within half hour, they got a call from the acquirer, and then we'll roll back the fees. So in the absence of Solaris or orchestrator, they had to agree with the new increased fees with the acquirer until they found the other option. So this is one of the many examples, but where the orchestrators like Solaris can help.
Yeah. Alexis, when looking for an acquirer, have you seen benefits or downsides doing that through an ISO like eFlow or others instead of doing that directly?
Yeah, I mean, where we would have no idea where to start. So yeah, that indeed try to go to trade shows, but then we would not know what questions to ask, what criteria to use. So we would pay a lot of learning money and lose a lot of time if we would have done that ourselves instead of through eFlow or one of your colleagues in the market, or Solaris for that matter, also with that knowledge. So yeah, also here goes that it's key, I think, to involve people with the relevant knowledge and relationships, because it's also that they trust you. And for us, they would start from scratch. So being suspicious, which makes sense from good business perspective. But yeah, it would cost us a lot of time and money in the end if we would have to do that all ourselves. And we would take years to be at that level. And again, the relationships are also key. That's also a learning. Well, as in any industry, that's also something I actually like. It's a lot is about people and relationships, and in a good way about relationships, not about unfair advantages. But yeah, working together with partners, and using each other's knowledge, sharing information, and here that's critical. Without that, we would also have been nowhere yet.
No. What would your advice be, Alexis, to somebody looking at this, maybe a merchant, and thinking, I still did not start this yet. Maybe I should.
Well, I also know some that gave up. So in that sense, we are not the slowest or the worst. And we're getting there. We really get good momentum now. So, but yeah, I think we could have been further if we would have engaged more relevant knowledge earlier in the process. So similar to what I mentioned, both in terms of partners and also technically. Like I said, when we build our platform, and still we actually would need developers with knowledge of this specific field. So we have people very experienced developing platforms for carrier billing, but it's such a different world that without the concept, without the lingo, it's a lot more complicated to come up with the right architecture. And even though part is done by specialists like Solaris, but on our side, there's also a lot to do in terms of data and also the billing platform, as we call it still. So yeah, that to involve specialists early in the process, either through a partnership like we do with Judah, with eFlow, and also with Solaris, or by recruiting someone or several people with that knowledge. I think that I would have done differently if we would turn back time 2 or 3 years.
Yeah. So Neil, what do you think the most important takeaway would be for somebody having watched this?
So the most important takeaway, what Alex just mentioned, so that he said he wished he would have started 2-3 years ago, So my suggestion would be to merchants like Sam Media, do not wait too long. This is the time. Engage with the specialists and get moving. And that's what we see. As Alexis mentioned, few guys failed in the past, and some of them have come to us and asking for the similar kind of advice and the suggestions how to go forward. They want to restart that part. So Alexis has clearly mentioned, go with the people who have relationships, who have the knowledge, because that will expedite the process and the business. So guys
That's
like yourself from eFlow, they have relationships, they have the knowledge, which merchant doesn't need to have that because it's not their core business. So work with the partners who already have a good reputation in the market. Work with the partner like Solaris, who has an award-winning platform and helping so many other merchants in the process. Go with them, partner with them, and then and roll it.
Yeah. We invite everyone who has questions, who needs support, to just reach out through one of the channels, including LinkedIn. And eFlow will also be at Telemedia in Barcelona coming up soon. Neil, if not mistaken, you will also be there.
Yes. Solaris is there.
Booth, right?
Yes.
Yeah, that's great. Alexis, will you join Telemedia?
Yeah, I will also be there. So happy to share our experiences with anyone.
Right. So we're happy to support anyone who needs that and to speak to you in Barcelona. But even if you don't attend in Barcelona, feel free to reach out. And I'm sure we will be able to share a little bit of advice and help. And Alexis, I understood you're always looking for talented people joining your company. Is that right?
Yeah, it's in line with what I said. We still need more of the specialist knowledge. So developers with that experience, especially because we're again looking at our platform and there's still so much work to do. And yeah, we are happy to talk to talents with that experience.
Right. Thank you very much to both of you. It was a pleasure. I learned a lot, and I hope all people watching this they learned something as well. And let's keep closely in touch. Thank you very much, Alexis and Neil, and thank you for having watched to us today. Bye bye.
Thank you for having us. Take care. Bye bye.
Cheers.